What do you make of Senator Grassley's comments? Do you think that is possible?
Well, thanks, Wilf. Yes. You know, this is part of a negotiation process that's going on. It's bilateral communications and negotiations with Europe, the European trading partners. And in a way, we're seeing this sort of real time instead of what goes on behind the scenes. So I think it's part of that process. But yes, they are trying to get improvement in tariffs from Europe. Right now, the European countries have a 10% tariff against U.S.-made cars. Our tariff is 2.5%. And so we're trying to get a trade agreement that allows a level playing field, and that is something that's an appropriate goal. The way it's going about is that they're using the same kind of pressure that I think they were using in Mexico, in Canada, and in China. It may be working in China. So I see it as a technique for negotiation, but not necessarily a stomach to go forward with the tariffs. That's probably not a desirable path for anybody to take.
So I get that we want to level the playing field, but Jim, would it really lead to more Europeans buying American cars? Because our Phil LeBeau, who you know covers the industry really well, points out the fact that American automakers make SUVs and trucks and crossovers, and that's just not what they want on the roads in Europe. I mean, there's a different culture and there's a different demand picture, and that could be a big reason why we're not seeing as many cars on the road. It's not just the whole tariff thing.
Well, you're right, Sarah. That's very true. In fact, you know, we've seen a lot of news reports lately about the U.S. manufacturers stopping to produce cars. And the reason they're doing that is the car demand in the U.S. is down for their volume. But if you think of the global volume for cars, it's about almost a third or more of the total volume globally of 60 million sales a year. But the U.S. companies aren't competitive in supplying cars to those countries, or even the countries like China where the demand is growing. So the fact of the matter is, you're right structurally, but maybe it would allow our manufacturers to become more competitive. You know, Ford
Jim,
still has
I guess the
Europe.
other side of this is whether the threat would even work, because so many of the sales in America of the likes of BMW, Audi, and Volkswagen are in fact manufactured in Canada, the US, and Mexico already.
Well, that's true. A lot of them are, but the bulk of their profit still comes from overseas production. And the other aspect of this, Wilfred, is that the hidden part of a tariff, you know, it's about an $83 billion increase in how much we pay for cars and trucks. It's about $4,000 a vehicle for everything. Even the cars that are built in America have parts that come from foreign countries, and those will be taxed. And so it does put a burden on the consumer, and it may actually put a slowdown on the economy. And that's one of the reasons that GM and Ford had such disparate earnings reports recently.
So what do you think would be the ultimate impact on the U.S. economy if President Trump were to go through with these threatened tariffs on imported cars?
It would definitely be significant, not only because we'd be paying a lot more for cars, and we still need them, but there's a trickle effect that goes on. The parts are more expensive, so you pay more for the insurance because the repairs in the body shops cost more, warranties cost more, interest payments on used cars will go up because the used car prices will go up because it follows where the new car prices are. And so it will be a drag on the economy, and that's one of the reasons there's so much uncertainty right now about what next year's sales forecasts are going to be, because Jim, it's an unknown.
You mentioned the Ford and GM outlooks. What was your take on those, and do you think U.S. auto sales have peaked?
U.S. auto sales have peaked. They were at about 17.3 million in 18. The forecasts are running 16.8 to about 17 for 19. Uncertainty because of the tariffs. Brexit has an impact. Interest rates. There's some headwinds that on car prices. So the fact is it's peaked, but at a good level. 10 years ago, we would have never thought we would be at 17 million, and it's peaked at this level. There's plenty of demand to go around, and the real focus is going to be adjusting our costs so we can build cars profitably at this 17 million level, and not just at an accelerating level, but at a plateaued level.